Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we will be looking at a dividend king, but before we do that I just want to say apologies for not posting anything in the last few days. My children have not been well and just going back and forth to the hospital, pharmacies, this and that, but alhamdulillah they are now better. We are back, everything is good. So in the next few days I'm going to keep posting as many videos as I possibly can, because I've got so much planned, but I just haven't had the time to record it. So that's what we're going to do. But before we actually look at this dividend king, I just want to touch on the market. So just this week the markets are down so much. It is so much red, and I don't think we are the end of this story. I think next couple of days, especially tomorrow, will be very interesting what happens in the US, because obviously Fed are meeting again. The interest rate might go up, and 0.75 or whatever it is that's going to go up. It's just going to be a lot more volatility. But again, remember, that's a great opportunity for people like us who are dividend investors, who have actually a long-term mindset. Even if you're not dividend investor, you are still picking stocks that are great for the long run. The companies like the CRMs and all of these companies, amazing companies that have a great cash flow and so on, then obviously you don't have to worry about anything else. Okay, that for us is a great opportunity to actually pick some of these amazing companies at a discount. And that's when the funny thing is, when everything else is when you go to the shops and things are basically on sale, like for example, if JD says every single trainers in there tonight is half price, everybody will be queuing up. But the fact that stocks are down this much, people are like, oh yeah, run away from it. This is not gonna be forever. Okay, so these companies, I'm sure at some point will come back. We'll talk about recessions and all these things in the next few videos, but I just want to touch on this basically, the fact that for us is a great opportunity. For example, companies like Lowe's, for example, is actually down 7% just this week. It's ridiculous. It's 7% for HD. Like for example, if a Home Depot, a quality company, is down 7%, what are you doing? Are you buying it, or are you just running away from it, or are you selling it? Okay, again, crypto is mad crazy right now. Everything is down. I think I lost half of my portfolio. Guess what? I haven't even looked at that, to be honest with you, and I don't genuinely care, because like I've always said to you guys, that's one thing. I I care more about stocks than actually crypto for now. For the long run, we'll see what happens with crypto, but it's very volatile. So anyway, let's go back to the portfolio. As you can see here, just this week, I should be down a lot. So at some point in this week, it was almost, I had £53,000 in this portfolio, and right now we're looking about 50,500 right now. Okay, and I've actually added some money to it. So yeah, you're not alone if you are in the red. At some point last week or 2 weeks ago, I was about 7% and up. Okay, almost £6,000 or whatever it was. Right now, as you can see, is £1,435 up. It's still up. It doesn't matter. Okay, that's the most important thing. So yeah, so let's talk about this dividend king. The company that we're talking about today is Procter & Gamble. If you look at just this week, okay, this company is actually down so much. It's about 5%. Normally you don't see Procter & Gamble down that much. In fact, just today I think it's down about 3.5%. And that's what actually made me do this video. I wasn't planning to do this video right now. So that's one of the reasons I actually decided to do this video right now. I looked at it, I'm like, why is Procter & Gamble down that much? And you look at Colgate, for example, it's down quite a bit. Kimberly-Clark is down. So all these, for example, Clorox, all of these companies are down about 3%, when some of the tech companies are up. So yeah, in a way, because they have been up so much in the last few months, is actually their turn now to actually come back down to earth, and it's good for us as investors, because what we're looking for is quality companies. So this is a company that actually sells so many diversified products. Okay, they have amazing portfolio. If you look at it from the healthcare, they've got personal healthcare, oral care, they have fabric and home care, they've got home care, beauty, grooming, like every single product you can think of on the shelves when you go to Aston, whatever, Tesco's. These are the products that you probably pick up if you got children in your family, and you just pick up and you don't even think about it. I genuinely buy Head and Shoulders all the time. I've never even looked at their price, because regardless of whatever it is, I'll just buy it because I need it. Okay, and this week my children were actually not well, so we bought this brand, the Browns, for the temperature thing. okay, because we just wanted to make sure their temperature is actually down. They had a massive fever, so we bought it. We just literally didn't look at the price because we needed it, because we needed to make sure the children are okay. So these are the type of products these companies have. And guess what? These are the companies that we should be investing in recession times. Why? Because they have a pricing power. And that's what I'm trying to say to you. So they have a pricing power. Regardless of whatever happens, we will go to the shops and still pick up those products, because they are products that we need every single day. So let's have a look at the financials of this company. So like I said, the company name is Procter & Gamble, industry consumer staples, current price is $133 per share. This company at some point I think was 160 or whatever it was, and I really was wishing that it comes back down to around this time basically price, because I needed this. I actually need to add more to my portfolio of this company. It's $348 billion market cap, okay, 23 PE. That's like the standard for this company. If you look at the average, is about 23. Okay, price to sales, which is quite low, 4. EPS about 5, and then as you can see, the EPS is growing next year. Okay, current ratio is slightly lower than 1. Beta is basically very, very low. Operating margins is excellent. Sales, look at that, almost $80 billion in sales last year, and return over the last 5 years, total returns over last year, almost 11%. The net income, $14.31 billion of net income, and that is basically after they paid all the taxes and all that. That's the money that they received. And look at their free cash flow, almost $14 billion as well. Look at how the net income always basically kind of matches what's going on with the free cash flow, which is really nice to see. That they've got an excellent profit margin, return on equity, absolutely brilliant. You can see from the charts how much this basically was up, and right now it's actually coming back down. Now, when you look at the dividends, okay, they pay you $3.65 and increase this dividend every single year for basically over 50 years. Okay, and they are still increasing it. Sometimes they actually increase a little bit, but they are increasing that dividend. Dividend yield of 2.64, payout ratio very, very low. So they have a room to grow that dividend, and 5-year growth rate of just 4%. Okay, dividend safety 99%. That's the highest any company gets from Simply Safe Dividend. Why? Because this company has so much cash, just we've seen it. So they have enough to cover that dividend. And when you look at, for example, total revenue over the last 5 years, okay, the 4 years and the trailing 12 months, look at that, $66 billion, $66.8 billion, $67.6 billion, 70, almost $71 billion, $76 billion. Okay, so 2020 to 2021 was massive growth. Obviously, probably because we were all at home, we were buying all these products. Maybe that's one of the reasons. But look at basically the trailing 12 months, $79 billion. So that's increasing. And then what happens? The gross profit is actually increasing as well, from 7 to 32 to 32.9 to 35 to 39 to right now 38. So next year, basically right now, trailing 12 months is about $38 billion. Okay, we've not finished that. And look at the free cash flow here. Okay, from 11. So in 2018, it was about $11 billion, 11.8, 14.3, 15.5, and then 13.9. Because remember, because this is a lot to do with COVID. Okay, but right now, as you can see, it's $13.9 billion. That's plenty of cash to actually reinvest in the company. Okay, and the fact that they have a pricing power, they are probably will carry on increasing. Okay. So in terms of financials, this company absolutely looks brilliant to me. And I have got it in my portfolio. I think I've got like 16 shares or whatever it is. When you look at the Morningstar, it's about 11% premium right now as we speak. Okay, but because it's down quite a bit, the price tag is $124 per share. Simply Wall Street, okay, it's actually saying 28% undervalued at the moment. The price should be 208, and I genuinely agree it should be between 160 to 100, basically 200 their price, because of the quality of the business and where it is. Tip ranks is actually saying 21% upside, and that's $167 billion dollars per share, and Yahoo Finances are more or less the same. Okay, next 5 years, it's almost 6% growth expected, and the earnings to grow 6%, and they definitely have a wide economic moat. I definitely agree with that. So this company is down about 19% from its all-time highs right now as we speak. So it's a very good company. It's literally has, is it basically they just print cash just genuinely because of all the products they sell, and the fact that they genuinely don't really, like, they don't have a lot of competitors, and their competitors are like Unilever and whatever, but there's enough. There's 7 billion of us in the world. Okay, so there's enough for everybody to actually get their fair share. So I absolutely love this business. I have had it in my portfolio for a very long time, and as you can see, I've got 16 shares. Okay, right now I have £269.99. So what I'm going to do is actually put that money to work and buy a couple of more shares of this company, because like I said, I've been waiting for this opportunity for a very long time, and now I have it. Okay, I'm definitely going to send that to the market, and that's it, done. Okay, so the reason I'm actually doing this is not because just to show off or anything like that, but I genuinely believe in this business. I've been waiting for a pullback for a while now, but look at the my price, what it was. Okay, 135. That's basically my price for the last whatever. But right now, and I was waiting it to come back to 132, whatever it was, and then today I actually got a notification to say it was $132 per share. Okay, so what I'm gonna do is, now I have 18.4 shares. I'm gonna try to get to at least 25 shares in the next few weeks. If it keeps going down, I'm definitely going to keep adding to it. So this is the kind of thing you should be doing. So in the last few days, okay, if you actually go to my Twitter, I start posting something on my Twitter as well. I actually bought shares. I think last night I bought shares of, who did I buy? Actually, I can't even remember now. I bought one share of, I think, Medtronics, and I bought one share of I can't remember the other company. I think it must be Lowe's. I think it was one share. No, it wasn't actually Lowe's. No, it was Medtronics and the Colgate, I think. I bought one share of each. And the reason I'm doing this is because I'm dollar cost averaging every single week anyway. But at the same time, I'm looking at the companies that I own in my portfolio that are down quite a bit at the moment. And obviously, what I want to do is just to keep buying quality companies while they're still on a discount. Because I don't want to be buying when they're like basically gone up another 20-30%. I want to buy it now. I want to keep buying it. If, for example, S&P Global, if it actually keeps going down, I'm gonna buy another 5 shares, 4 shares, whatever I can in the next few months. Why? Because I know this company is not going to go anywhere. Whether we go in recession or not, that's not the point. The earnings might slow down, but eventually, this is what's going to happen. It's going to keep going up. So if you look at, for example, this year, it's been absolutely terrible. But in the long run, okay, normally what you will see, in fact, something is going on. I think they're doing some sort of update, training 2 and 2. There's something going on. I'm not sure. Let me go on here. Let me see max. Okay, that kind of looks a little bit more realistic. But anyway, the point I'm trying to make is there's a lot of quality companies out there right now, really at a discount, okay? Whether it's a healthcare, whether it's a consumer staples or consumer discretionary, or even tech companies, or like companies like Qualcomm, that's been down quite a bit in the last few months, okay? There's actually opportunities out there that we can, definitely grab, hopefully. I hope you enjoyed the video. Like I said, I'm going to keep posting in the next few weeks. Next couple of days, because I've got so much I've planned in the last few weeks, but I haven't had the opportunity to post it. So that's what I'm gonna do. I hope you enjoyed the video. Have a wonderful day. If you like this kind of content, please like, subscribe to the channel. Take care. Assalamu Alaikum.